Hello, everybody. Welcome back to another episode of CoinLogic TV. I am your host, The Logical Dude, and today I'm excited to talk to you about the Stochastic Oscillator or the Stochastic RSI. They're actually two different indicators. We're going to be talking about both of them and why I prefer the RSI version over just the regular Stochastic Oscillator. But before we get into any of that, you may be wondering, what are you talking about, dude? Well, that's what we're here for. Our Trading for Beginners series is taking all these technical indicators, breaking them down into as simplistic terms as I possibly can break them down for you, and giving them out there to you for free. So if that's something that you like, please just give the video a like, subscribe to the channel, hit the notification bell on YouTube to notify you in case I drop any more videos, which I do every Monday, Wednesday, and Friday. We got the MACD video coming up. And then we're going to be tying all this stuff together in future videos, coming up with some cool trading strategies for you to help you along your trading journey so that we can all make money together, right? Because that's what it's all about. We're just here to make money, and beat these markets out. So now that we've gotten all that housekeeping out of the way, let's talk about the Stochastic RSI and the Stochastic Oscillator. So what are these things? So what is the Stochastic Oscillator? So what it is, it's a momentum indicator that compares the closing price of an asset to its price range over a period of time, generally like 14 days, okay? So it's often used to identify potential trend reversals, as well as overbought and oversold conditions, very similar to the regular RSI. Link for that is in the description down below. So go check out that video too. So the Stochastic Oscillator and RSI, they run the same way. I'll show you the difference when we get into the charts. So, but the oscillator typically represents two lines on a chart. Okay, the K line and the D line. The K line represents the current closing price in relation to the high and low range over a set period of time. By default, generally, it's, like I said, around 14 days. So it's typically a faster moving line than the D line, okay? And it's used to identify short-term changes in momentum. The D line is a moving average of the K line, okay? So it's actually the average of the movement of the K line, right? So it's typically a slower moving line and used to identify longer-term changes in momentum. All right, so how can it be used in Bitcoin trading? Well, let's jump right into the charts and take a look at how we use that. So here we go. All right. We are here on our Bitcoin daily time frame charts. We're going to come up here to our indicators. We're going to type in Stoch, and then guess what? It pops up here. All right, so you have the Stochastic, which is the regular Stochastic Oscillator. We'll add that to the favorites. We're going to put that up here. And then I'm also going to put up the Stochastic RSI. We're going to put that in the favorites, and we're going to tap that too. And I'm going to show you the difference. All right. So right off the bat, you got the regular Stochastic Oscillator up top. You can see how choppy this K line is. This K line is the blue line. The red line is the D line. Okay, so you can see the D line is more of a smooth line. It's more of that average line. But that K line is just really kind of choppy, right? So it can give you some false signals if you're not careful. All right. Well, the way this works is very similar to the way that the RSI works, in the fact that you have the 80 line and the 20 line, which are your overbought and your oversold levels. All right. So if the stochastic crosses over this 80 line, it's considered to be overbought. And you might be looking for a market reversal at this point. So if we look at this particular example here on the daily time frame, when the K line reached over this level, that was the top of this little run here, and it did come down. Okay, so we came down here to the bottom. And so the same way, if we're below the 20 line, it's considered oversold. All right, and if it stays below the 20 line for a while, well, that's looking like it's going to be a nice little downtrend for a little bit. All right, the 50 line, all right, which is right smack dab in the middle there, that's basically your bullish and your bearish point. So if it crosses over and it stays over this line, so like right here, you see it staying over the 50 line, that is basically saying that you're in a bit of an uptrend. You're in a bit of a bullish trend, which right here was a short-term bullish trend, okay? Well, it couldn't cross back over and it ended up dropping. And then we dropped below the 50 line. Well, you see what happens when we drop below the 50 line right here? That was an indication of a trend change. Well, what happened? The price dropped. We went under the 20 line and stayed under it for a while the price continued to fall. All right, we had this little small pop up here, boom, and then that's it. So it's just it's a momentum tracker. All right, so you can see here the differences in the oscillators. Okay, so this is tracking that closing price, but the stochastic RSI does the same thing, but it also adds in the RSI involved in that as well. So it does make the K line a bit of a smoother line. Okay, so it's a bit more, it follows the momentum a bit more. All right. So it's a little easier to use, and it's a little easier to call your drops versus like this up here gets really, really choppy. Okay. Now, if you're wanting to get really detailed, get intraday, this is definitely a faster line. Okay. So if you really want the fast trade, this is a faster line. The RSI is a little bit more of a lagging, the stochastic RSI lags a little bit more. Sorry, go back on that. So you can see here that it is a faster moving line. So if you want those quick grabs, then use the stochastics. But if you want to have a little bit more confirmation and a little bit easier time reading the stuff, the stochastic RSI works really well also, but it just may be a little, so you got maybe one candle behind, as far as the movements are concerned. So, but it's just a smoother trend. So when I'm looking at more of a swing trade, I'm looking more at the smoother confirmations. I want to, have a better idea that it is going to be making the direction that I'm trying to go into. Whereas when I'm looking at something, say maybe the 15 or the 5 minute, I may look at the stochastic oscillator because it's a faster move so that you can actually catch those scalps a little bit easier. So it just depends on your style of trading. Okay. So yeah, it's just another type of momentum oscillator that you can add to your toolbox. It's definitely something that you can check out and do your own research on. Okay, so above anything else, that's what's most important is you have to find what you're comfortable with and you need to do your own research on it. Don't just listen to me. This particularly is an indicator that's not one of my top used indicators, but it does call some pretty good moves. All right. So I do add it in with a couple of other strategies that I play. So again, we'll be getting into that in the later videos. All right. So to close this thing out, okay, the stochastic oscillator can be an absolutely valuable tool for identifying potential buy and sell signals, overbought and oversold levels, as well as trend changes in the Bitcoin trading market. So, however, it is very important, just like any of these other indicators, that you don't use it by itself, that you use it in conjunction with other indicators, trading patterns, support and resistance zones, other things like that, to be able to confirm that you are making the right decision for your trading business. Again, this is a business. If you look at it anything other than that, you're gambling and you don't want to gamble. You want to be a successful business person. So make good decisions. Use all the tools that you have, but the better that you understand how these tools kind of operate, the easier it's going to be for you to use them later on in the future. So I hope that I helped you out with this a little bit today. Understanding the stochastic oscillator and RSI, the difference between them, why I like the RSI version a little bit more for swing trades. The stochastic oscillator can be a lot better for scalping strategies, things like that. So again, it's all depending on the trading strategy that you want to use for your business. So until next time, everybody, please like the video, subscribe to the channel, make sure you're hitting that notification bell on YouTube, but come and check us out on the Hive blockchain. Come sign up for an account. Your username is your wallet address. Fast, free transactions, like confirming finished transactions within 3 seconds. It's a beautiful blockchain. You can come and, find your niche, get involved with different communities, and just engage. And you get to earn money for it. It's a pretty cool place to be. So until next time, y'all have a great day. Don't get wrecked out there. Be cool, be real, and always abide.